Improvements in labor market conditions have been widespread,
Okay,
including
everybody.
for workers at the lower end of the wage distribution,
Just took a long
as well as
here
for
on the
African
euro
Americans and
versus the
Hispanics.
USD.
Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. Employers are having difficulties filling job openings, and wages are rising at the fastest in many years. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE
I think we
prices
got
rose
that washout now on the
6.6%.
euro, so now I'm looking
Excluding
for
the
a
volatile
pop-up.
food and energy categories, core PCE prices rose 5.2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond.
The fill is at 20.
Disruptions to supply have been larger and
105
longer lasting
20.
than anticipated,
That's
and
my
price
sale.
pressures have spread to
I'm
a
looking for
broader
a
range of
break
goods
to the
and services.
upper part here.
The surge in
And move
prices of
higher.
crude oil and other
Let me go ahead and
commodities
make
that
this a little
resulted
bit
from
more
Russia's
organized.
invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well. Russia's invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine.
Blame it on Ukraine. Okay.
Our job is to consider the implications for the U.S. economy, which
This
remain
shit's been
highly
going on for
uncertain.
years with this.
In addition to the effects on inflation, the invasion and related events are
With this
likely to
easing
restrain
shit.
economic activity abroad and further disrupt supply chains,
And now they have someone to
creating
blame it on.
spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely
So anyway,
aware that high inflation
as I was
imposes
saying, I'm
significant
looking for a
hardship,
washout. I talked
especially
about
on
that
those
yesterday
least
in the
able to meet
video.
the higher costs
Looking
of
for a
essentials,
washout
like food,
here in the euro,
housing, and
a
transportation.
run of stops, and then a
We are
reversal
highly
to the
attentive to the
upside.
risks that high inflation poses to
Obviously,
both
this
sides
is
of
a
our
risky
mandate,
trade.
and we're strongly committed to
And you know
restoring
what? Why don't I go through the disclaimer to sound
against the
professional?
backdrop of the rapidly
Let me
evolving
put him on mute. So the disclaimer is trading stocks, futures, Forex is very risky, and you may lose all your money. So be careful and be prudent. Okay? You can very well lose all your money. With that said, let's go ahead and talk about the euro. How did I figure out that we may get a stop run reversal? Well, I mean, it's just experience, okay? It's watching for years and years what goes on during FOMC, looking at patterns, looking at price action, understanding what the overall opinion
and we
is
will
out
continue to
there,
communicate our thinking
and
as
then
clearly as
waiting for
possible.
the right time and making the move.
Our overarching focus is using our tools to bring inflation back down to our 2% goal. With regard to our balance sheet, we also issued our specific plans for reducing our securities holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner, by
Jerome
allowing the
Powell
principal payments from our
making
securities
his
holdings to roll
announcement.
off the balance sheet,
We're seeing a
up to monthly cap amounts.
weak futures here.
For Treasury securities, the
But-
cap will
but
be
not-
$30 billion per month
you know,
for 3 months.
The charts are
then
not
increase to
warranting me
$60
to stay
billion.
short here. I was short before.
The decline in holdings
I
of
didn't
Treasury
like it,
securities
got
under this
out.
monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months, and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap amount. Our balance sheet decisions are guided by our maximum
I gotta
employment
tell
and
you,
price
man,
stability goals.
Don't even
and in
try
that
to
regard,
figure out all those bullshit
we'll
that
be
he's
prepared to
saying.
adjust any of the
You know,
details
I
of
can
our
sit here
approach
and sound
in light of
like
economic
a
and
super
financial
economist, but
Making
you know,
appropriate
it's not-
monetary
it's not
policy
really
in this
trading.
uncertain environment requires a recognition that the
Just
economy
sounds
often
good.
evolves in unexpected ways.
so with that said, let's
Inflation has
mute his
obviously
ass.
surprised.
Let's talk about the charts. Purchasing coupons, mortgage-backed securities, and you know, we're focused on what's happening here and now, and that's that. So what is the chart telling us? Well, I gotta tell you something, my friends. Let me put these things on. Freddie's asking, is it worth it to actually listen to this guy when we're trading? You make the call. If it makes you sound smarter, feel better, go for it. You know, whatever floats your boat. You want to impress the girls, impress your wife, whoever the heck you impress. You know, have this guy talking in the background while you're clicking buttons. Whatever.
Chair Powell, the unemployment rate.
Now, I'm not saying that.
In March is now
I mean, this gives a great fundamental, you know, outlook.
Over the next 3 years.
So I'm not downplaying this, but not necessarily for day trading.
For the longer run rate that you submitted in the projections in the last meeting.
Let's do it. We're looking for a break of the highs.
For further declines in the unemployment rate changed since March?
That's what we're looking for.
What does this imply for your inflation forecast, and how has your level of confidence changed with regard to the feasibility
so far, no
of slowing hiring without pushing the economy?
This is the 30-minute candle. Hey, I want to see a close up here.
So
make it a beautiful candle.
You're right.
With a super long
3.6%
wick.
unemployment is
We got
just about
20
as low
minutes
as it's
till the
been in
1 hour
50 years.
closes.
And I would say that I expect, and committee members generally expect, that we'll get some additional
And
participation.
as you can
so
see
people
where
will be
we
coming
stopped,
back into the labor
right
force.
around that
We've seen
overhead
that particularly among
resistance
prime age people.
that keeps
And that
holding
will,
us
of
back
course,
from
tend to hold
flying in the
the
euro.
unemployment rate up a little
Okay.
bit.
It's about that
I would also
105.70.
expect, though, that job creation will slow. Job creation has been at more than 500,000 per month in recent months. Very, very strong, particularly for this stage of the economy. And so we think with fiscal policy less supportive, with monetary policy less supportive, we think that job creation will slow as well. So it is certainly possible that the unemployment would go down further.
This is fundamental, and based on what I'm
so
saying
I would
here,
expect those to be relatively limited because of the additional supply.
every
and
once
also
in a
just
while
the-
you
just the,
do catch a
the
word
slowing
here and there, and then as a
job
result,
creation.
the futures
Implications
move,
for
Forex
inflation,
moves.
really the wages matter a fair amount for
Once
companies,
again, I'm
particularly
long here.
in the service sector. Wages are running high, the highest they've run in quite some time.
Maybe I'll start using interactive brokers
They
charts.
are one good example of, or good illustration, really, of how tight the labor market really
I don't
is.
know,
The fact that wages are
kinda
running
like
at the highest
these.
level in many decades. And that's because of an imbalance between supply and demand in the labor market. So we think through our policies, through further healing
Yes,
in the labor
Steve,
market.
that's correct. What I do is I'm placing, the euro. I mean, hey, I have a spot account too, spot Forex, but I like to have the S&P next to the, futures, oil, whatever. I like, and that's why I just kind of enjoy doing the MT4, whatever. But in answering your question, yes, that is true. All right, so we're up pretty good. Almost up 30 pips here, Euro US dollar. Now we're seeing that pretty aggressive reversal candle developing on the 15-minute. Okay, and the 30-minute, remember what we just said? I said, look, I'll wait for that nice, beautiful wick, and we'll see how this 30 closes. So far looking nice. I want to see a pop through the highs, maybe a stop run, then I'll exit. I don't think I'm going to be marrying this tonight to hold. Let's see what these characters
higher
are up
rates,
to here.
for example, of vacancy filling and things like that, and
Talking
more
about
people
the,
coming back in. We like to
employment.
think that supply and demand will come back into balance, and that therefore wage inflation will moderate to still high levels of wage increases, but ones that are more consistent with 2% inflation. That's our expectation. Your third question was
Your level of confidence that you can slow hiring without pushing the economy into a downturn.
So. I guess I would say it this way: there's a path. There's a path by which.
Yeah, I know
we will be able to
fundamentally,
have
you have a lot of problems in the Euro Union
moderate
now with
in the labor market,
Ukraine,
and
fuel,
and therefore
oil,
have vacancies
natural
come
gas.
down
It just goes on
without
and on.
unemployment going up.
But
because
we
vacancies are
don't
at such an
we don't
extraordinarily
trade
high
according
level.
to
There are
that, though. You know,
1.9
it's nice to
vacancies
read
for
about, but
every unemployed person.
see, check this out,
11.5
people.
million vacancies,
That's
6
nice,
million
and we're
unemployed
blowing
people.
through
So-
those highs.
And we
You know,
haven't been in
bye
that
bye
place
Powell.
on
Now I'm getting distracted, so I don't want to get distracted. Focus on our trade. Let me just shut down some of these windows here. Grabbing the pips. Okay, we're up about 60 pips here. Nice. All right, let's do it. India raised their rates last night. They raised their rates. This was a surprise raise. Shocked the markets from the raising of the rates. Got that. You can go to CNBC Business News. You want to read about that, but India raised their rates. I don't even know why I'm talking about that, but whatever. I guess the point is it's a global tightening. It's not just the U.S. And as we talk about raising of the rates, we're raising the S&P 500. So you want to listen to that stuff and make your day trades, you go right ahead. I've done it in the past and I've gotten destroyed. I'm going by my strategies, man. And as a result here, what we're seeing is a nice move. Remember I talked about maybe blow some of the stops and then get out. So we kind of did blow through some of the stops. Let's see if we get a follow through, okay? It would be nice to get a, let me just zoom in here. It would be nice, get rid of this here, to just come a little bit higher, maybe blow through these, and then maybe I'll sell into that. That would be nice. I just kind of feel like maybe it's a little premature for me to go selling now. Maybe I'm getting greedy. I don't know. Up 60 pippies. The raising of the rates. Raising of the rates in India. Click data and download. Click settings and data. Settings and data. Man, this kind of is a little stupid, I know. With this green screen, whatever the heck this thing is. Sorry if it looks a little stupid. I'll figure it out where it doesn't look so cheesy. I don't know. Is it the light coming in? It's got to be I'll have to fool with that. Data. We are moving higher here. 105.85. Blow the stops and go to 106 would be great. We are making pips right now. Alright, dudes. Yeah, man. Good job, Joe. Joe took profits. Joe from Arizona taking the profits. We are still going higher. Higher is what it's gonna be. I don't want to put music on and kind of start distracting. I just, you know, 42.36. Look at that. Whoa, S&P blowing the stops. Let's go ahead. I'm not in S&P. I was short before. It's a good thing I got out. I would have had my ass handed to me. We're coming up on a trend line, so be careful if you're long S&P. Getting ready to get out of the euro dollar long. Man, we gained about 80 pips. We're right around 80 pips. I think it's about that time. Let's do this. This is the E7. I don't know if you people can see that. That's the E7. I don't think it shows my account number. That would be really stupid. Here we go. E750 contracts. I'm about to get out. Yes, 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 yes. Wow, that is nice. This is beautiful, people. 90 pp's. 90 pp's. I'm stalling here. I like to stall when I'm up big. Alright, 1, 2. I told myself I was going to get out here, so 1, 2, 3. My exit is filled. Sold. 50 E7, June 13th, 2022. Now again, these are futures. You could do spot. What the heck is my fill? Done. See what the heck we made. That is a nice trade, man. Loving it. What the heck did I... Wow, shit. That's nice. 20 G's. But you know what? I don't want to think of money. I don't want to think. I don't want to think of money when I trade. Okay. So as much as you can make 20, you can lose 20. As much as you can make 200, you can lose 200. We don't get married to profits. We don't get exuberant. We don't get too excited. We can't. All right. So I mean, we're still moving up here too on this euro dollar. So I mean, this was a pretty fat ass move. But I don't regret. I got out at 106.05. I don't regret that. Okay. I think it was a beautiful move, and I'm happy. So thank God I got winning when I got in. I'm looking at the S&P now, and I'm just talking about we're reaching a level here where we may actually come off of this area, and that may even affect the euro dollar. So all right, everybody, I am done for the day. I just wanted to put this live. FOMC euro dollar, our entry was about 20. Okay. And we're still going up, huh? Anybody still in this trade? All right, well, good job. Play it as you see it, you know. I may have gotten out way too early. I really don't know. It would have been 100 pips right here if I was getting out here. It's okay. You know, so I got out quick. For everyone that you ride, like, there's going to be pullback, so it kind of all evens out. You know, in other words, if I didn't get out, and if you do that consistently and you don't get out, sometimes it turns around. So again, bottom line is cut the losers, ride the winners. Okay, so 85 pips, 84 pips after you account for the spread on that trade. Not bad. All right, Gary got 73. Jordan got 89. Nice. Alex, did you get in this trade? Okay. You have to pick up your child from school. I understand. Don't worry. Every day there's opportunities. Well, almost every day. If it's not there, we don't trade. Alright, everybody, so it's been a pleasure. 4240. We are still rocking in the S&P. Yeah. Still rocking in that S&P. 4243. Boom. Nice. And again, you know, people can say, well, what did Powell say? Why did it start to rally? Who gives a shit? He didn't really say anything to make it rally, you know? everything shows up in the charts. And that's why day in and day out we work it. Ooh, that looks kind of stupid when I do that. Yeah. I'm just trying to show the whole chart though. And I thought it's better for everybody. Maybe I'll make myself smaller here, you know, so you people don't have to see me so much. How the heck do I do that? I think I gotta come to this area here. Okay, is that it? I'm shrinking! Now I am getting bigger. I think right about there is probably good. Alright, people, well, we're still going up, you know. Alright, I could have waited a little bit longer. Whatever. I gotta leave with my son in a little bit. Didn't get the perfect entry. Exit. But, you know, I'll grab the 85 pips. It only took us a half hour of trading, or actually less than that, right? I think it's less than that. Nobody wants to get out early, but alright, so I got out 20 pips ago. Anybody still in? Okay, good. 6-7 people still in. That's nice. You know, but again, if it flops down here, don't blame me. I'm not encouraging you to stay in. I'm not encouraging you to get out. You know, whatever. This is just basically a trading room. I'm telling you what I'm doing. I'm you know, providing my opinion on things, and then you take it from there. There's no quote signals. All right, everyone have a good one. I think I've already said that before, and then I started talking on. Take care, and I'll see you at Forex Day Trading Room.com. Ciao, ciao.